In this video, I'm going to show you another example of a gap up situation. And this one is what I refer to as a live uh, presentation. And by that, what I mean is that I'm taking a situation, and I've spotted an opportunity, and I'm describing why I would get into this situation as a next day gap up. And I'm doing it this way because I want to I want to make you aware that this is a situation in which it's easy to identify these particular situations. Sometimes we get confused when we look at the indicators, and it just doesn't seem to make sense. Excuse me. And what I'm alluding to here is that you've got three patterns that you have to look at in order to establish a gap next day. And those three patterns are finding identical indicators. At least 12 out of the 22 market force recognition indicators need to be in a pattern or in a situation. Although I have found less, but it doesn't gap as much. It just doesn't have the supporting data or supporting evidence that you need to generate a larger gap. The second thing you need is a down touch in the trend chart, either trend red or green, trend red, trend green, or trend gray need to down touch trend yellow, pink, or blue, or the zero line, or they need to down touch underneath the zero line. And that fifth area underneath the zero line is controlled by the crossover, because your trend red, green, or gray do not physically touch a line or physically touch something. The control issue is the crossover zero. When trend red crosses over zero, then the next day it goes back up. And there are a few situations in which trend red crosses zero, and then trend green crosses zero the next day, and then the gap up. But it usually doesn't. Usually when that happens, trend red is in a low angle down, and then it's easy to spot or identify the fact that that will be a strong movement up the next day. The third area is the area that causes confusion for some, and this is the proximity group. We call it the power 4. That's the pink, blue, white, and yellow. And those are the essence. I guess the power 5 is the essence of the proximity group, because its power Zion makes your power 5. And occasionally we'll talk about the power 3, and that is without yellow. So it is the pink, blue, white lines together as a group, because as you may or may not know, when we talk about the yellow twins, you've seen zip yellow and power yellow. When they're both lowest and going up, you're in an uptrend. When they're both highest and going down, you're in a downtrend. So you know that zip yellow operates independently and often separately away from power white, even though they're a pair. Now, the issue that we have, there are two conditions that we use. There are shapes, proximity pattern shapes, or you might say power 4 line shapes, and power 4 line locations. The shapes are typical as and almost identical to the indicator shapes that we find within the 22 market force recognition indicators, and obviously so because they're also the same when they're in the indicators. But there can be a couple of little nuances that we'll pick up at a different time. The location, the power 4 location conditions are when power 4 lines are above power orange and power Zion is under power orange. That's a divergent condition. And another divergent condition is the power 4 up and power Zion down. Power 5, all 5 lines can be above orange, all 5 lines can be under orange. Power 6 is with the power red line. Oftentimes we get more impact when power 6 is with the power 5 lines. And so, especially when all of them are above 0. And so the locations that the proximity group power lines are in, be it power 3, power 4, power 5, or power 6, is more important even than the patterns. And most of the patterns are the shapes are repeat themselves often, but the locations have flexibility to them. Another example is that power yellow can be under power orange, and the power 3 lines can be above power orange. Don't get confused in the power lines. When power red crosses 0, it's changing directions and prices are going up. When power red crosses under 0, it's changing direction and going down. The price is, obviously. So 0 line has to do with the price, but power orange line has to do with divergence. And so there are many types of divergence. Sometimes you can get the power 4 lines. You can have power pink and blue up, power white and yellow down, and then the Zion can be under the power orange. There's just many different ways. You can have pattern divergence. For example, you can have power pink in a right leg W higher and power blue in a right leg W lower. And then you can have many of them across the board in different charts as well. And so the one thing that really adds to gap activity or gap, I'll say, I was going to say volume, but the distance, the physical size of the gap is divergence. And there is literally dozens and dozens of types of divergence. And so keep an eye on divergence all the time when you're looking at conditions. We can spot, I'll flip over to the charts and I'll explain one thing. We can spot, like for example, we have a scan set for a trend red, crossover green, and down touch the blue line, or be above the blue line. And that's what this one is. We are in ZUMZ. Today is July 5, 2017, and we have, in this particular case, we have, if I counted correctly, 20 TOC lower patterns across the board in the 5 subcharts. That qualifies us, obviously, for the identical indicators. The trend red is down touching the blue line, so that gives us one down touch in the example, and that's what we need, or in the opportunity that we're looking at, and that's what we need. And then if we go down, when we go down to the power chart, we can see down here that power red, I'm going to expand this a little bit more, power red is down touching the green. We have power yellow lowest, and Zion is right next to it. And what we have, the case that we have here is a power 6 all above the power orange line. And with that, we have several other situations. We have one conflicting situation that we might say, and that is over here in the zip chart. We have zip Zion highest. But if in fact this does gap up tomorrow, the other lines will bury zip Zion, obviously. And then in the swing chart, we have a TOC lower in the yellow, pink, and Zion. We have, we have Zion down touching. In this case, it's probably closest to the green, so we'll count that. But one of the areas that we sometimes forget is the swing gray line. You can use that as a down touch line because it is a slower moving line. It is a deep cycle indicator, and just like the zip yellow and blue can be used as a down touching line in our calculation, or in our supporting evidence when we look at what's happening in the situations. And so in zip pink here would be down touching the blue in this particular example. And so we do have a fair amount of activity in the form of supporting evidence, and we also have obviously a lot of indicator. When you have 20 lines, and keep in mind 20 lines does not mean that you're going to have a gap up. You have to have the other evidence of the three patterns: the identical indicators, the down touch, and the power 4 location. And in the power 4, or in the proximity groups, we have a list describing, there's probably about a dozen pattern locations that work with gaps up. When they're mixed, when going in different directions, which you'll see a lot, then there's obviously not likely to be a gap. Or when you don't find a down touch, you are not likely to see or to find a gap. The one thing that is not a down touch that I'll make you aware of, we call it the sky touch, and that's when trend red is highest, and it's going along with trend green. They're both going up, and it usually occurs with 1 to 3, sometimes 4 days. It very seldom occurs after that. But when you have the red and green going up, red above green, and usually red is higher. That's not always the case, but is higher than the yellow line, the trend yellow line. But that's not always the case. Sometimes this happens when they're in between the trio, trend yellow, pink, and blue. So in this particular case, with the evidence that we have on ZUMZ here on July 5, 2017, it looks like we're going to have a gap up. And again, for those of you that haven't seen a number of videos, sometimes we miss it and we don't calculate the value of what the lines represent, and we end up with an uptrend. So we could get 2, 3, 5 days up instead of a gap up. But this one looks fairly good. The trend red down touch blue, when it crosses the green line, is usually a pretty strong reversal pattern going back up the next day. So we'll see what happens tomorrow morning after the market opens, and we'll go from there. Hope that what I've been saying is understandable. We don't know of any other organization that can find gaps before the gap occurs. We trade gaps, and some people say they trade gaps, but they're not trading gaps. They wait for the gap to occur and then they trade it. And we don't know of anybody that has the sensitive indicators, because you may have heard me say it before. The sensitive indicators, the 22 market force recognition indicator lines, are the heart of the system. Without those, we wouldn't have the patterns that are formed. We have 20 some patterns pattern types going up, and 20 some pattern types going down. And the identical indicators, the down touches, and the proximity group patterns are just 3 of the 20 plus patterns within the pattern types up that are within the DTVB system. So it's a powerful system. Until you use it, you're not going to recognize the effectiveness and the capability of the system. We do not encourage you to use it before you're ready. Look at the videos, and I'll say it again, look at the videos. You don't have to trade immediately. The more time you spend looking at the videos, the more time you're going to understand, and you're going to I'll say there's a theme. There's different themes that you mentally comprehend after you've seen numerous repetitions of certain things happening. And just through watching videos, especially if you're interested in gaps, just through watching gap videos up and down, you'll begin to see the patterns that I'm talking about. You'll begin to see the themes that are running through the situation. Divergence is big. When you find divergence, you will typically find gaps up, gaps up, gaps down. And the reason is because, just think about it, you have 2 indicator lines, one going up and the other one going down. So you have 2 forces that these indicator lines have identified, and one's telling go up and one's telling go down. And so when you have that mixture of pulling and pushing within the forces of the marketplace, in that particular stock, it causes a reaction. And typically it will be a gap, especially if you have 5, 6 different patterns that are divergent. One of the key ones to look for divergence is swing Zion and swing pink. Remember, swing Zion is a price barometer. It runs with the price. And swing pink is one of your primary leading indicators. Zip red and swing pink are the 2 fastest lines in the system. They're different types of lines, because zip red will move 30, 40, 50, 70, 90 points in a day. I mean, many times I've seen it under 5 and go over 90 next day. And the price hardly moves. But that gives us a lot of information for the day after that. Because the whole system is built on reversal recognition. The strength of a push and we identify the strength of a push through indicator line length. One big type of divergence is a BOC or a TOC pattern, between pairs. And those are pattern divergence. And actually, we think of it as just one line moving, going down. One's longer or shorter than the other, but there's no way to identify that without looking at the line before that, so you know that it's above or under that line. And when you have pattern divergence, then you have potentially a much stronger movement next day. So lots of power in this system. We have the identical power, the formula power, and the procedures power. And the formula power is taking those patterns that we find, verifying the good conditions with those patterns, and then using the signals to enter or exit the trade. So our high probability is way out of whack as far as other people might be concerned, or think that it should be. If normal high probability is 75 or 85%, we're up above 95%. And that's basically because we hand pick the trades through the good condition verification process. And this formula process that we go through gives every trade that we pick a high probability of going in the direction we anticipate. And no one out there has a system like this that we are aware of. We really encourage you to think about the system that you are using. I mean, if you're like me, in 2007, I bought a stock and I thought it was going to go up. I hadn't built one indicator. I didn't have anything going except for the fact that I thought it might be going up. And that's the trouble. If you've had a chance to look at any of the information about traps that we get into, I mean, I'm no different than any other person that trades, beginner or pro. We get involved with things and we forget about why we need to be doing certain things. And you know, just like when I decided that I was going to trade, and at the same time I was going to find a good system that I could use so that I wouldn't have the inconsistency problems, because I would gain one time and lose the next, and it was just a vicious cycle. So I had to have a method, a system, or a procedure or something to stop my inconsistency. And that's how this system that we have today was developed. It's been many, many years, but we've spent a lot of time thinking about it. One of our big things was that we had to be able to identify the strength of a market movement. And with the leading indicators, we can see it ahead of time. And that just sounds crazy to most people, but they haven't looked at this system. They don't understand the power of sensitive indicators. I mean, we threw away a lot. I probably worked on 12 to 1,400 indicators. And granted, not all of them were the market force type recognition indicators, but there was a huge number of those. And we picked only 22. Totally, there's only 40 functions in the entire system. We've got 9 on the candle chart. That's 4 band lines, upper and lower band lines, and the master long-term trend line, which is the blue dashed line on the candle chart. Then you've got the swing Zion, which is the swing gray, which is the deep cycle indicator line, and you've got the swing blue, which is the crossover line of the swing red and green as an identification of a start of an uptrend. But yellow crosses faster than the swing blue. And then you have the 7 short-term trend lines that we developed as a part of trying to find the short-term trend, because those are more important. The short-term trends are more important than the long-term trends. And we tried to create one line, but it just didn't work. And so we ended up creating 3 groups: the trend trio, pink, yellow, blue, and the power orange and green, and the swing red and green. The trio moves faster. You'll almost always see the trio move ahead of the other 2 and tell you that the trend is going up. But obviously, of course, the fast lines like the trend red and the zip red, those, and the power red, swing Zion, those are the ones that are going to tell you instantly what's happening. And those are the ones that we use for the turnarounds. So lots of information there. I encourage you to look at more videos, and the thing that I really encourage you to do is analyze the system that you're using and compare it with what we've got here, because there's a lot of competition out there, and you can use every bit of knowledge and expertise to work against those that have been in the business for a long time. We started as beginners. We built the system for beginners. We know how beginners think. We just mandated certain things that we needed within this system, at least after we got started, or after we made the decision that we wanted to share this with others. In the beginning, it was just for me, but then we realized that when things started coming together, that this could be something that we could share. So it's a powerful system. You'll be amazed if once you see how it works, because the indicator lines will truly tell you what's happening within the market forces of that specific stock at that point in time. Whatever you do, have fun trading.